Welcome everyone. I am excited to be here. My name is Kent Savage. I am a tax attorney. I'm excited to talk to you about taxes. And so as it says, this is about how to maximize your tax savings and the different strategies that you can use as a trader to do that. Obviously, anyone listening is probably trading or interested in trading. And there's people at different levels. People are just starting out. People who've been trading for a while. Some people trade in different areas. No matter what you're doing or how you're trading, taxes are a big deal. So I'd love to talk about that today. I'm going to spend a little bit of time breaking things down. I'm also going to take questions at the end. So if you have questions, please feel free to send them in. If I get to them while I'm going through the slides, that'll be awesome. I might just take them at the end, but I'll try to get to as many questions as possible. Now, as we begin, I need to share with you a quick, because I am a lawyer, we need to do the quick disclaimer. Okay, so on behalf of Traders Accounting and myself as an attorney, I want to just point out that there is no lawyer-client relationship from listening to this webinar going over the slides, okay? If you call and you become a client, things change a little bit, but we want to just give you some general information about taxes. So take 1 second, take a look at this. I'll give you about 10 seconds to read through this, and then we'll move on. Okay, well, I do not know if that was really 10 seconds, but we'll call it 10 seconds and we're gonna move on. Now, by the way, during this presentation, you're gonna, if you have more questions, if I don't get to answering every question, because sometimes I can't get to all of them, or if you wanna have a consultation, which we'll bring up a few times, feel free to reach out to us at Traders Accounting, this learn@tradersaccounting.com, or you can give us a call at 800-938-9513, okay? I will be going over a few different things, and this will pop up more than once, so don't feel like you need to rush up to write it down right now. Now, the whole reason why you're trading, obviously you want to make money, okay? Everyone wants to make money. It doesn't matter what you're trading in. You want to make some money. That's why we're doing it. One of the big things that people don't realize is that taxes usually are the biggest expense that you have once you start making money. Okay, so people, they might pay for services or other things like that, and you've got your fees that go along with trading, your data fees and everything else. But the biggest expense that most people come face to face with is the taxes. So knowing what to do and how to approach your taxes can do a lot to drop that expense, okay? Because it's just one other expense. For a business, taxes are an expense like any other expense. And if you know how to approach it correctly, we'll be able to lower your taxes. Now, the very first point of lowering taxes as someone who trades is to get the classification as an active trader, okay? You can either just be an investor, the IRS will look at you as an investor, or as an active trader, okay? Active trader means as a business. So you see the second bullet point here, as a business. If you are an active trader, then you get to be taxed as a business, okay? As an investor, you just get taxed on the trades that you make. Most people fall into this category because they don't realize that they can be taxed as a business, okay? And you can be taxed as a business if you do the right things, which we're going to cover coming up here in a little bit. But the first thing I want to point out is for people who aren't active traders or who don't actually set up a business, one of the biggest pitfalls is that you can be classified as a hobby. Now, a hobby is where the government basically says, hey, you've been trading, you haven't been doing super well, or you're trying to take deductions and we don't want you to be taking the deductions. So what we're going to do is we're going to say that you are a hobby, and hobbies do not get to deduct business expenses, okay? So a big way to get around this is to actually set up a business. Now, again, we want to talk about actually getting you set up as a business and how you apply and how you can actually take whether or not that applies to you. These are the rules. So if you fall in these categories, then you can become a business as a trader, or you can become you can get this active trading status. And again, the active trading status means that you'll actually get a trade. So here are the basic rules, okay? If you do 200 to 300 round trip trades a year, okay? If you spend about 500 hours dedicated to actively trading. Now, when I say active trading, just so you know, this also includes research and other things that go along with it, okay? So about 500 hours, that's about 10 hours a week, okay? A little bit less than 10 hours a week, but we'll call it 10 hours a week, or trading for 170 to 180 days a year, okay? Now, these specific categories, they're not set in stone. There is no set rule on what makes you an active trader or not an active trader, okay? What we get these numbers from and these actual specifications and these rules, the reasons why we have these rules, they come from tax court cases, okay? So people that fell into these categories actually were considered to be by the tax court active traders, and they were able to get that status. So as long as you also follow into what they've already said works, then we know that you can get that status. If you feel like you're right on the edge, or you feel like you're going to get there this year or anything like that, give us a call, okay? We'll talk to you. We'll have a free 30-minute consultation. You can call, ask any questions that you want about it, and we'll see whether or not you can qualify for this status, all right? Now, as we go, if you do qualify for the status, you're able to create a business. And creating a business does a lot of things. The first thing it does is it can help us avoid the hobby rules. Okay, so we have those hobby rules, and that is you're trading, you're not as profitable as you want to be, and so then the IRS says, you know what, we think you're just playing around because you're not as profitable as you want to be. We don't think you're super serious about this. So then they say, so we're just going to call you a hobby. And again, this makes it so you can't deduct your expenses. If you actually set up a business, this helps you provide a lot of legitimacy to your trading business, okay? So you can actually set up an actual business, an LLC, a corporation, inside the state in which you live. And again, we'll talk about that a little bit more in the future. If you do this, you can start to take tax deductions. You can deduct your expenses, okay, for your business. If you have a loss from trading, that loss you can take, you can even carry that loss forward to offset future profits. If you take the right tax elections, you can sometimes use that loss against your actual income from other sources. So let's say you have another business, you know, you're investing in real estate or doing something else like that, and you have some losses from trading, or you're working a normal job and you have a W-2 and you have some losses for trading. Sometimes, again, it depends on the tax election we make. You can take those losses and you can use them against your other income. So even though you're making the same amount of income from your other job, we get to lower the amount of taxes you take on it. All of this can be becomes a possibility once we set up that business, okay? Now, I really like businesses for a few other reasons. Some of this you'll see is already here, the no IRS reclassification issues. That's the hobby. That's what we were talking about as being a hobby, okay? A lower IRS audit rate. So believe it or not, when you actually set up a business and you give yourself another business with another tax return, it actually lowers your audit rate. The IRS tends to take you more seriously, okay? Now, once you start making a ton of money, and we're talking in the millions of dollars, audit rates tend to go up, but they still tend to be lower if you're making them inside of businesses, which again is really interesting. Again, we've already mentioned that you can deduct all of your expenses, and that you can carry over some of your business, you can carry over business losses to offset other income. So you're basically creating personal losses. The last thing that I do want to point out is asset protection. depending on your state and depending on how you set up your company can provide you a level of protection. Okay, now almost every state provides you protection from your company. But when you're trading, that's not something that's usually that big of a deal. It's a big deal when you have, if you're renting properties or you're running a business, we're actually interacting with customers every day. Trading's not exactly the same because you're doing it usually on your own on a computer. That being said, a lot of these states have laws that actually protect your business from you. So let's say you go and you have a car accident or something like that, or someone in your family has a car accident. Having the right company set up, and again, it depends on the state and a few other things, but when you set it up correctly, a lot of times the income that you're getting from that company can be protected from other outside issues. So other lawsuits, the car accidents, other things like that happen that create liabilities in your life, you can actually protect this income, which is really neat. Now, the reason why the IRS really, they like you to set up businesses, and we talked about how they can reclassify you as hobbies if they wanted to. The reason why they can do this is that technically under these cases, and I've listed them out here, and you can look at these if you want. But basically, under some cases in the courts, the courts have basically said that, hey, if you're going to run a business, we were able to set the tax laws. The government's able to set the tax laws. So any deductions that they give you, they're what they call a legislative grace, meaning that they don't have to give them to you if they don't want to give them to you. So if you get audited, you need to provide adequate records to show that you are able to take the deductions that you claim. Okay, there's nowhere in the tax code that it says that you need to keep these records, but you do have to keep the records according to these cases if you want to take the deductions. Now, this really only applies if you get audited. And again, when you open up a company, those audit rates get lowered, but it's really good to keep a track of all these deductions. And speaking of these deductions, I want to go over a few of them with you. The first one that I want to go over is actually startup costs. When you start a company, we can actually look back for a period of usually about 12 months. Sometimes, and depending on the situation, we can even extend it back to 15 months. But money that you spent learning how to trade or doing other things for the past few months, even if it's before you set up the company, we get to take those expenses as a deduction for the company up to $5,000. If it's above $5,000, then we still get to take the deduction. We have to be creative about it. What we do is we take everything above $5,000 and we put it into the company as an asset. It becomes a number that goes into the company as an asset. That asset gets to be amortized, meaning that we get to deduct it over time. So you still get to deduct it, but we don't get to deduct it right up front in the first year. But your startup costs for setting up the company up to $5,000, we actually do get a deduct. So a lot of times people, when they've spent money in the past year, we can set up a company now and still capture that. The cool thing though is once you do set up the company, you can start capturing other expenses that you can take. So for example, here's a list of some of the ones that you can take, and this is just a beginning list. But for example, you can take the organizational expenses. These are expenses that you take to actually set up the company. So, you pay someone to set up an LLC and to do the documents, you get to deduct that. Equipment purchases. Equipment purchases, technically they are capped, but they're capped at like $1 million. Okay, so usually most people don't need to worry about that. Startup costs, again, getting everything going for your business, we get to deduct all those things. We can start to take mileage, okay, when you're driving back and forth between different things for your trading. Now, people actually they have a lot of questions about mileage. Feel free to ask them, and if I get to them, I'll be able to cover it at the end. But mileage is really interesting because people will say, well, how do I take mileage as a trader? Because I'm just sitting in my room. How do I actually take mileage as a trader? You can, you just have to do it right. So there's certain times where you have travel or meals or you're going different places. As long as we can tie it to the business, then you're able to take that mileage as a deduction. Again, really cool. You can make contributions to retirement plans, so you can have 401ks that are set up for your business and other retirement plans. People, retirement plans, IRAs, 401ks, those types of things. You can make contributions to retirement plans if you set things up right. You can deduct life insurance. You can deduct your travel. You can deduct meals. Again, you have to do it right, but you can deduct these things. It's really awesome. All these things are expenses that you can deduct. And if you can, a lot of people use these things, you got to eat anyway. A lot of people travel anyway. What we do is you set up a business and then you actually tie your business to your life. When you go do things like eat meals and when you travel, we tie it to your business and we make sure that you're doing the legwork and doing the right things so that it actually truly is part of your business. And then we can start taking deductions. So again, it's really cool. And these are all things that we can do when you start a business and you're an active trader. I should say that those deductions, by the way, those go against your earnings. So if you start earning money as a trader and then we can deduct it, let's say you earn $20,000 trading, and then if we can get $20,000 of deductions, well, then you're at zero for the year, which is really cool. Just so you know, one of the things we're going to talk about are what types of businesses you should set up. You can set up lots of different types of businesses. One of them is a C corporation. If you do qualify to be a C corporation, one of the other things that you can do is reimburse your medical expenses. So in other words, basically what happens once you do all these reimbursements, it says a reimbursement plan, but what we're really doing is we're making your medical expenses an expense for the company, which means it's deductible to the company. So when you have a C corporation, your medical expenses get deducted to the company. Now, this is really cool for someone who has a lot of medical expenses or someone who makes a decent amount of money and also has a lot of medical bills. Some people out there might know that medical expenses can be deducted on your normal taxes, again, if done right. It's only once you hit a certain percentage, if your expenses exceed a certain percentage of your income, then you can deduct them in certain cases. There is no limit on this. You can start. There's no, you don't have to qualify at a certain, you don't have to spend a certain amount of money. It starts day one, $1. You can start reimbursing for medical expenses. So again, that could be something that's interesting for some people. Now, I wanted, as I mentioned, there's a bunch of different types of businesses that can be set up. So I actually wanted to point them out. These are the different types of businesses that can legally be set up here in the United States, okay? A sole proprietor, an LLC, a corporation, which can be a C corporation or an S corporation, okay? And those are tax statuses. One of the question is, well, which one do you choose to set up? They're all set up for different reasons and they can be helpful for different reasons. For example, every single one of these businesses allows you to deduct your expenses. So going through and having these businesses, you can deduct your expenses. There are some cons of using some of these. So for example, a sole proprietorship, generally they're the most audited. So even if you do set one up, it actually does lower your, according to the numbers at least, it has lowered audit rates in the past for some people, but they are the #1 audited group. Generally, there's no asset protection there. Again, it depends on the state, but generally there is no asset protection. If you do set up an LLC, then you still get to do the deduction of expenses. There's much lower audits, and the IRS tends to take everything you do a lot more seriously. C corporation, generally this is for higher earners or someone that has a lot of medical reimbursement that they need to do. But generally C corporations, we use them for higher earners. What is that number? It really depends. You can give us a call and we can talk to you about it. But there's we don't use them for everybody, but there's some people that they use for. S corporations, generally people don't use them for for trading. They are really great for other types of business. Most businesses in the US, most small businesses are run as S corporations from a tax perspective. There's some really cool things you can do with taxes that don't apply to trading companies because they actually don't have to pay payroll taxes. S corporations let you do a lot of cool things with payroll taxes, but trading companies don't have to pay payroll taxes. So for that reason, S corporations aren't generally something that we recommend. You might have an S corporation and there might be a time or two where it makes sense to use it. But again, you just should set up a time to talk to us and we'll let you know. We'll tell you what we think. So if you want to set something up, go ahead and go to this link or give us a call. Okay, so the link is www.tradersaccounting.com/30-minute consult. All right, so give you a second to look at that, or else give us a call, 1-800-938-9513. Just giving you a minute to take a look at those addresses and the phone number again. By the way, the phone number is at the bottom of every slide, just so you know. Now, people will ask a lot, and so I decided that I wanted to go over it. What state should they set their business up in? Okay. Generally, and it's actually because of some really good marketing, a lot of people like to use Nevada. Okay. Generally, my answer to you will be, please, please not Nevada. All right. If you do have a company in Nevada, that makes a lot of sense if you're living in Nevada. Okay. But if you're not in Nevada, generally it doesn't work out as well as you think. Here's why. Whatever state you live in, and there are some exceptions to this. So again, give us a call and we can talk to you about what really works for you and what will work for you, what will be the best structure. Generally, the state that you live in, if you are running an active business, which again is what we're trying to do, we're trying to get that active business status. If you are running an active business, you need to have that company registered in the state that it is doing the active business. Now, again, there are a few exceptions to that, but not as many as people think. There's only a few states that don't have an issue with that, but most do. So generally, you need to register that company in that state. What Nevada's done is they have a lot of companies out there that will go out and say, hey, Nevada's awesome. We've got great tax laws. Well, it doesn't matter because you're not operating in Nevada. So Nevada taxes don't apply to you, okay? They say, hey, we've got great asset protection laws, which again, that's great if you live in Nevada. But when you're in another state, for example, Arizona, where Traders Accounting is located, if you go to court in Arizona, the courts are going to say, well, hey, you might have a Nevada company, but you're operating here in Arizona, so we're going to use Arizona law, which, by the way, Arizona has really, really good LLC laws. So, you know, for what it's worth. Nevada is also very expensive. People say, hey, Nevada's private. Nevada is not private, okay? You have to play a lot of games with how they name the companies and do different things, and you have to pay someone to be a nominee and all these other things to actually keep things private in Nevada. Nevada is not a private state. There are other states that are private, okay? Nevada is not one of them. If that is something you're interested in, you can talk to us. We'll tell you what the options are. But again, generally the answer is whatever state you're in, you need to set up a company in that state. Now, if you do, or you have set up a company in Nevada, call us. We might be able to work with it. Sometimes what ends up happening is we need to register the company in Nevada and in your state. And then after a year, we can just stop with the registration in Nevada. We just move it to your new state. But again, it just depends on where you are. So let us know and we can talk to you about it. One of the things that I want to point out real quick, because it does come up. I mentioned at the very beginning about tax elections. You can do a few things and we can make some tax elections that will go along with the company that you set up that can affect how you're trading. One of those tax elections that I do want to point out has to do with wash sales. Now, most people who trade are familiar with wash sales. Some of you might not be familiar with wash sales. I'm going to read you this because this is the actual IRS language, and I want you to see how complex they can be with these language issues. But then I'll try to explain kind of the idea of a wash sale. So this is from the tax code. It says disallowance of loss deduction in the case of any loss claimed to have been sustained from any sale or other disposition of shares of stock or securities where it appeared that within a period beginning 30 days before the date of such sale or disposition and ending 30 days after such date, the taxpayer has acquired by purchase or by an exchange on which the entire amount of gain or loss was recognized by law, or has entered into a contract or option to so acquire substantially identical stock or securities, then no deduction shall be allowed under Section 165, unless the taxpayer is a dealer in stock or securities and the loss is sustained in a transaction made in the ordinary course of such business. For purposes of this section, the term stock or securities shall, except as provided in regulations, include contracts or options to acquire or sell stocks or securities. Okay, basically, what this is saying, and again, I wanted to read that to you to show you how kind of convoluted the language is. Basically, what this is saying is if you're doing stock or options, if you have a position and you sell out of that position and then within 30 days you buy back into that position or basically the same position and you have a loss from the first sale, the IRS is going to disallow that loss. They're not going to let you take that loss. Now, they will take the gain. So if you have a position and you sell out of it and there's a gain and they're going to tax you on that gain and then you buy back into the position, they're absolutely going to take the tax on the gain, but they won't let you take the deduction for the loss, which is crazy because of course they want their money. I had a good friend come to me who had some long-term positions. He wanted to change brokers. So he actually sold all of his positions and he had them for years and they'd all had a substantial gain. And then he went to a new broker and bought back into all of those positions that he just sold out of. Well, he did it within like a week or two, and he definitely fell into this wash sale time period, okay? So if he had had losses, he wouldn't have been able to take those losses, but because it was gain, he had to pay taxes on the gain. And he's a super nice guy. It was really a bummer. You know, we were trying to talk to figure out something to do. There really isn't anything you could do. He had to pay a lot of thousands of dollars in taxes, which was really a bummer. Now, the idea behind this is the IRS basically thinks that people are trying to cheat them on taking losses. So they'll say, hey, it's December 31st and it's the end of the year, so I'm going to sell this position, but I really want to get back into it. So I'll sell on December 31st, the tax year will end and I'll get a loss. And then on January 1st, I'm going to buy back into the position. Okay, IRS says, heck no, it's not going to happen. They don't want you to do that. That's a bit of the logic behind it. There are some ways around wash sales. So depending, this again, it depends on what you're trading. But if you are trading those stocks or those options, you actually have the opportunity to make a mark-to-market election. Excuse me, my slides went down. Let's see if we can pull that back up. All right, sorry, I accidentally hit a key there. We can make an election, a tax election, so that the wash sales no longer apply to us. That's called the mark-to-market election. Okay, now we are going to cover the advantages of that. There's some other crazy things it does. One of the things that it does is it actually changes your capital income to ordinary income, which is a very jargony way to basically say that you can save some more money on taxes if you have some losses, but we'll get into that in another webinar. Okay, we'll get into what it is, we'll get into what does it do, we'll get into how do you get it, how do you make that election, what types of traders want to use it, when you don't want to use it, and when you actually have to make the election. Again, one of the cool things it does do, just a little intro, just because I'm a little bit of a geek when it comes to this tax stuff and I love it, you get to get rid of the wash sale rules, those loss rules. Okay, but anyway, we'll move on, but it's kind of cool. Now, I want to point out one thing about specifically about taxes with traders. Trading, being an active trader, the money that you make is taxed differently. Okay, it's taxed in a way that most accountants don't know how it's taxed. And what I mean by that is that the money that you make when you're trading, it does, it's not subject to payroll taxes. Okay, unless you're trading out of a certain business and you're doing it in certain ways, you actually could make it subject to payroll taxes. But a lot of accountants have no idea that money that is traded is not subject to the payroll tax. And part of that is because the only exemptions to the payroll tax are clergy. So people are making money because they're preaching the good word, or people who trade. So it's a very limited group. And most accountants don't know about it. Most business accountants, they'll work with other businesses. They have no idea that a trading business doesn't have that issue. So a lot of people just straight up pay too much money when they go to a normal accountant. So because of that, again, give us a call. We can talk to you about how much you've been paying, or we can just be a good resource for you. Again, we give free consults, so feel free to give us a call, 800-938-9513, and we'd love to talk to you. Now, I wanted to say thank you guys very much for letting me talk about taxes. I know taxes are, I know that for most people, taxes aren't super exciting, but again, it will save you a lot of money. That's what we're trying to do here, is we're trying to set things up so that we can actually get rid of that biggest expense that people have. If you think it might apply to you, or you want to understand how it could apply to you, or maybe you want to get a head start for the future, feel free to give us a shout out. Give us that call, 1-800-938-9513, or go to www.tradersaccounting.com and /30-minute consult. Again, I'll leave it up here for a second so you can write that down. But feel free to reach out to us. We would love to talk to you. Again, it's a free 30-minute consult. See what business structure would work for you, if you even would need a business structure, if it even made sense. If you have other questions, we would love to talk to you. Again, I'm an attorney. We've got people there that are fantastic on the tax side and the entity structuring side. We can walk you through and answer your questions. So we would love to talk to you. Now, I would love to answer some questions. I'm going to go through these in a second, but I've got a few questions that came in. Let me just pull them up here. All right. As I scroll through these, I'll try to pick out ones that I think we should address. Somebody said, can I use an S corporation for trading? So if you remember back, I had mentioned you can set up an S corporation. It's one of those things that you can use. Can you use it for trading? The answer is it depends. Okay, I know that's a really frustrating answer, but the truth is it really does depend. Sometimes you can, when you have the right setup and the right accountant. Generally, it's not the best setup for people to trade out of. So give us a call. We can talk to you about it. If you have an S corp for some reason, again, give us a call. We'll talk to you about it. But generally, no, we don't use the S corps for trading. Somebody said, what about using Wyoming for privacy? If you guys, when it comes to setting up things in other states, just so you know, Wyoming actually doesn't give you as much privacy as you think. It's better than Nevada, okay? But no states really give people privacy except for Delaware. And there's a couple others where you can get an idea of privacy. Again, Nevada's really not one of those states. In any state that you're in, if you really are worried about privacy, technically there's ways to get it. Very legally, very straightforwardly. It's just you have to use you sometimes have to use a trust that owns the company, and then you use the trust for all the names that you have to file. Okay, there are ways to have privacy, but we want to make sure that everything's filed correctly. So again, talk to us first. Don't just go to a different state and get a company just because someone said that you could, because again, you have to register in your own state and you have to give all the information that they want you to give in your own state. And again, people say that there's privacy. There really isn't. Nevada does not have privacy like people claim it does. Wyoming can, sort of. New Mexico can, sort of. Not as much as you think. But again, just call us and we'll talk to you about it. We'd love to talk to you. Someone said, I'm not making a lot of money yet. Do I need to set up a company? Again, the answer is it depends. So when you're not making any money, we can still put you in a business entity and you can get that asset protection. So you know how we talked about the potential asset protection in certain states. If you do something, you're actually protecting this business, this little nest egg that you're growing. You can have that in place, and then once you start making a little bit more money, we can make the right tax elections that you need and do anything else. But sometimes it just makes sense to set something up right at the beginning. Some people, and again, it depends on your situation, especially when you start out, sometimes we can go ahead and take deductions, even though you're not making money. We can take deductions against your business still and have an overall loss. Now, we can't do this for years and years and years on end, but we can start out where you can create a company as long as you fall under the standards. We can create a company, even if you have losses, we can use those losses, those business losses, to offset some of your other income that you have, which is awesome. So sometimes it makes a lot of sense, even when you're going to be spending money doing education and other things like that. A lot of times it makes a lot of sense to set up a company, because then we can take the full deductions that you want to take as you're preparing to make more money. And then when you make more money, we'll still write off the money that you make to, as much as we can. We'll take deductions against it, but sometimes it does make sense to have a company set up even when you're not making any money. Sometimes it doesn't, depending on what other income you have coming in. Again, call and talk to us. If it works for you, it works for you. And if it doesn't, we'll let you know. But again, it just really depends on a person's individual situation. But sometimes we can save you a lot of money, even when you're not making money trading. Somebody mentioned, does research count towards their trader status? So if you remember back to the trader status, there are some, they have a 500-hour a year, which I told you is about 10 hours a week. And I think I mentioned this when I went over it. I think I did mention something about research. Maybe I wasn't super clear on it, but the research absolutely can count towards your trading hours. So when people are studying, they're researching, or you're practicing, all of that kind of thing can count towards that 500-hour requirement. Again, if you don't know if you fall into one of those categories, give us a call. We'll talk to you about it. Because like I said, those aren't set in stone categories. They're what we got from the tax court. So if you have a situation that's close to that, or you want to know, or you think maybe you'll qualify in the future, again, talk to us and we'll just tell you what we think about that. Somebody asked, I have a real estate company. Can I use that for my trading as well? My short answer is no. It's really good to separate. It's good to separate your companies. Sometimes when, and it depends on how much money you're making and what type of real estate you're holding and all of that. Sometimes when, are you renting it out? Are you not renting it out? Is it an empty lot? Is it vacant? What liabilities are there? Sometimes you can put those together. Again, sometimes they're taxed in different ways. Real estates can be taxed in a lot of different ways. I told you that trading is a unique thing, so is real estate. We tend to understand that here, so give us a call and we can talk about it. Sometimes it does make sense. Usually though, what I say is if you have income streams coming in, let's protect both those streams and keep them separate. So generally I recommend setting up a couple different companies, and again, I think that's a pretty simple idea, but sometimes we can combine them. It's just a unique situation. So again, give us a call at that number on the screen, 1-800-938-9513, and we can talk about it. Oh, somebody asked a question that maybe a lot of you will understand out there. It's kind of a tax theory question. They said, can I deduct ordinary deductions from capital gains? I think what they're referring to is for a lot of people who are trading, the money that you make, and again, this depends on the elections we do, but for a lot of people trading, when you make money, it's a capital gain. Okay, and then when you have an expense in the business, It's considered an ordinary expense for the business. You can absolutely use business expenses to offset capital gains. You absolutely can. In fact, the IRS thinks it's a good deduction because those ordinary deductions can be used to offset ordinary income, which is generally, it's a big generally, but that is, I should say sometimes, it's sometimes taxed at a higher rate than ordinary, than capital gains. So technically the IRS thinks they're getting a good deal if they let you take ordinary deductions against capital gains. The truth is, for you, it's still a dollar for dollar deduction. So I just don't think it matters that much. I think, yeah, absolutely, let's use those deductions. So for all of you guys, basically what we're saying is, if you trade, you have capital gains, we can still use deductions like the mileage deductions, the food deductions, the home office deduction. I actually see a question about that. Somebody asked if they can take a home office deduction. I'll get to that in just one second. We can do deductions like that to offset the money that you make, even if they are capital gains. So again, that's kind of a tax nerdy question. Whoever out there who sent that in, kudos to you for knowing enough to ask that. That's a pretty good question. But yes, we get to take deductions from the money that you make. Speaking of that, there's a home office deduction question. It's a little down the list here. I'm going to jump to it and then I'll come back up. Somebody asked if there's a home office deduction that they can take. Absolutely. You should absolutely be taking a home office deduction if you're an active trader. Absolutely. There's a couple ways to take a home office deduction. Call us. We'll talk to you about it. Okay. Sometimes, and depending where you are, there's what they call an actual calculation method where we do the square footage of your office to the square footage of your home, and there's a ratio there, and we do calculations on how much you can take. It sounds complicated. It's really not that complicated. And sometimes we can just do it off of the square feet of the home, square feet of the office, and that's all we have to know. But call us and talk to us. It is a nice little deduction. There's an old wives' tale out there that the home office deduction leads to audits. That's just not true. Okay. There's a lot of old CPAs and tax professionals, a lot of attorneys that will tell you, hey, that just leads to audit. We don't want you to do it. That's just not true. Okay, you have deductions. The deductions in the tax code, all deductions that are in there, you are entitled to them. So please take the deductions you're entitled to, because that's just really important. It's a basic right in the tax code. You get to take those deductions. So I really want you to be able to take all of them. Somebody asked, speaking of deductions, can I deduct healthcare? That depends. It depends on how you're set up, and it depends on the company. Call us and we can talk to you about it. Every type of company is a little bit different. And again, the answer is it depends. I wish I could get more into it than that, but I really, this probably isn't the best place to do that. But again, answer is it depends. Somebody asked, can I use one company for multiple trading accounts? Yes, you absolutely can. So if you have one company, you set it up and you're trading different type, if you're trading Forex and then you're trading stocks, depending on what you do, you can absolutely have those different, if they're at different brokerages or even in the same brokerage, you can absolutely have them in the same company. Talk to us, because there are elections that you can make that might apply to you and they might not, depending on what you're trading. So for example, you're trading futures and Forex, those tend to you tend to do things different tax-wise than if you're just trading securities. And sometimes when you're trading both, we need to balance that and see what works best for you. But again, talk to us. Somebody asked if they can use their 401k to trade. You can use a 401k to trade. You absolutely can. You can also use a company that we set up to own a 401k. That's what they call a solo 401k. So for example, if you have a company and you're making some money, just like your normal job, when you have a W-2 job, you can put some of your money into a 401k. You can technically do that while trading. Some people don't. The money that goes in there goes into the money that goes into your 401k actually gets taxed. So again, it gets taxed a little bit differently. So we'd want to talk to you about it, but feel free to reach out and we can talk about it. And let's see what other questions we have here. Someone asked me how high are your taxes, or how high are my taxes? Meaning the person's taxes. I don't know how high your taxes are, but you can look up on a tax bracket to see the answer to that. But I do want to say trading is really cool, because if you trade and you have that active trader status, that active trading, even though it's an active company, all active companies have to pay payroll taxes besides traders and, again, clergy. So really cool. You don't have to pay payroll. So just from that, by the way, everybody, payroll is 15.3%. So just from active trading, you save yourself 15.3%. If you have an active trading business versus another type of business. Now, so a lot of accountants, like I said, they don't understand that. Okay, you have to fill out the tax form right, but you do not have to pay those taxes when you trade. Again, really cool. It's really unique, and that's one of the things that an accountant has to understand. So I don't know what your tax bracket is. You can look it up. You just have to type in tax bracket into Google, but do know that it will lower your payroll taxes. That's about all we have time for today, guys. Thank you so much for being here. I hope we can help you out. Feel free to give us a call, or again, use this link. I'll give you one more second to look at it. Feel free to reach out to us. We'd love to talk to you, give you that free consultation, and see if there's something we can do to help you or lead you in the right direction. Again, this is Kent Savage for Traders Accounting. Hope you guys have a great rest of your day.